Today we live in a rapidly changing world, a world that is heavily dominated by technology. By the end of last year, we had almost 3 billion people who had access to the internet. And 1 out of 4 people who go online come from the developing world. The developing world is by far the fastest growing population that is coming onto the internet, that is being served by mobile technology. In 2011, this was a survey that I happened to come across. There was a survey that found that 62% of all people that use banking services prefer to use internet banking rather than go to a physical branch. The world is becoming more and more data-driven, and this was something one of my colleagues told me about. She says, if you were to think of a byte of data as a cup of water, then in 2 days we actually have as much water as the Indian Ocean holds. So that's a lot of data. And this data is something that can help us to do what we just talked about, the objective of the session, which is, and everything that we are deliberating upon in these 3 days, which is how are we going to bring more people in to the financial net, how are we going to provide more security for them. So apart from the fact that using technology can cut down on transaction costs, it can also help in terms of saving many billions of dollars every year. But it is also a potential means to encourage personal development. And I'm hoping that in today's session with these 2 wonderful speakers who are here with us today, I'm hoping we can touch upon a lot of those aspects. Andrea Thomas is our first speaker. She's an associate partner in Dalberg Global Development Advisors in their Washington, D.C. office. She specializes in Dalberg's strategy and performance practice area and has a particular focus on ICT and mobile for development. Her work has ranged from creating 5-year business plans for a UN agency to developing the governance model for a multi-stakeholder partnership in support of digital payments, to assessing how women access and use the internet in development countries. Our second speaker is Firoz Ahmed Khan. He has been the head of retail banking in BRAC Bank since 2008. He has over 15 years of working experience in the banking and commercial sector, and particularly he's been with Standard Chartered and ANZ Grindlays, 2 banks that have been heavy users of technology right from as far as I can remember. With this, I would like to request Andrea to make a presentation.
Thank you very much for the kind introduction. Thank you to ADB for the invitation here. And thank you also for having this presentation be so well-timed as to come right after a discussion of e-money in the Philippines. I think that actually many of the points that I will touch on expound on what was introduced there. So what I'm going to do today is to talk about innovations in remittances, and specifically how mobile phones, among other forms of what we call branchless banking, create opportunities for improving remittance access, cost, and speed. Just as brief context, the findings that I'll be presenting here today draw from research that was done for CGAP. For those of you who are not familiar with CGAP, that stands for the Consultative Group to Assist the Poor. They are a partnership focused on expanding financial inclusion that is housed at the World Bank. We did a series of 3 annual studies for them, doing a landscape of remittances through branchless banking. And all of those studies are public and available on their website. So what I'm going to do today is touch on 4 things. What is the landscape for remittances through branchless banking? And again, focusing specifically on mobile. Where is it headed? What is what are really the innovations, the cutting edge of what we see today, and then what does this mean for the customer, ultimately for financial inclusion. But before I start, I actually wanted to step back and paint a picture of what we mean when we talk about international remittances through a mobile phone. What we're talking about is somebody on the receiving end in a developing country who's holding can be a pretty basic phone, a feature phone we call it, like a Nokia. And they need access to a mobile wallet. So the country needs to have a mobile money ecosystem. For example, here in the Philippines, two of the oldest mobile money platforms have been established, Smart in 2001 and Globe in 2004. Now, if somebody receives a remittance into that mobile phone or that mobile wallet, they can do three things with it. They can keep it, and so then that remittance that comes into their phone is effectively now a savings account. They can transfer it, and then that mobile phone becomes a platform for payments, either to friends or family beyond, or to a retail network if that functionality exists in that country. Or they can cash it out. And then the remittance is not really any different than a remittance that's sent to a Western Union or a bank branch somewhere, except that through access to the mobile money set of agents, there's greater access than they might otherwise have. And so that's why we find this particular area of innovation so exciting, is that it potentially expands access to remittances through that agent network. It can lower the costs of those remittances. It can increase the speed. And so you're cutting down on potentially a 3 or more day lag in getting the remittance sent over. And it provides added flexibility in how the remittance is spent. Very quickly, what our study covered, it did not cover anything that had a remittance go to a bank account. That is well covered elsewhere, but our study looked at where remittances could particularly help reach those who are unbanked. And so it looked at mobile phones, prepaid cards, and other forms of what have been described as e-money. And it assumed that the remittance was being sent either in a cash form or as to pay for a basic necessity, which I'll touch on later, some non-cash forms of remittances. So with that, this is one of the reasons why we're so excited about the potential for remittances into mobile is the reach. And so this expounds a bit on the picture that we saw from the Philippines on the earlier presentation, is just how many additional access points you have when you're looking at mobile money instead of either traditional remittance providers such as Western Union, post offices, or commercial bank branches and ATMs. The scale is just tremendously greater and continues to expand quite quickly. And increasingly, mobile money is accessible by many countries across most regions. So the ones highlighted in purple are those where there are member countries of ADB. And this is number of countries that have some mobile money form of deployment. And this also shows the greater prevalence of mobile money penetration within certain countries. The purple countries are those that have 3 or more mobile money services already. So it's not just that there's greater access of some mobile money service, but actually there's increased competition. And particularly interesting are the yellow stars, which show where there are interoperable markets. This is really critical and actually leads to an interesting statistic around how we're considering mobile penetration at all. So interoperable markets mean that if I have a Globe account, I can send money to a friend who has a Smart account. That is actually typically not true in many countries. Without that interoperability, people in many countries find themselves carrying multiple SIM cards to have that flexibility either for access or for mobile money reach. That means that every time you're counting those extra SIMs, people assume there are more mobile phones in the world than there really are. And so I just wanted to touch on this quickly because there are numbers from 80% mobile penetration to 120% plus mobile penetration in the world. And that implies that everybody in developing countries has a mobile phone today. That is not true. Roughly the ratio of SIM cards to actual ownership of mobile phones is 2 to 1. In developing countries, roughly 45% of people have a mobile phone. And so for all the innovations that we're describing here today, I did want to put some context in it, which is that there are a large number of people who still do not have a mobile phone or access to a mobile phone at all. So that's another challenge that needs to be overcome for some of the benefits here to be reached. One last piece of context on the mobile money ecosystem before I switch to remittances directly. There are about 100 million registered mobile money accounts across Asia. That sounds like a lot. It's tremendous growth already. But as a percentage of the overall population, that's roughly 2 to 3%. In Africa, in sub-Saharan Africa, they've reached about 15 to 20% penetration on registered accounts for mobile money. And so just wanted to put that in context as well. A lot of the learnings that we're seeing for remittances through mobile, beyond what we're seeing in the Philippines and potentially in the Pacific Islands, is actually coming from sub-Saharan Africa. So now on to remittances. What do we see for international remittances into branchless banking or into mobile phones? We did 3 studies in 2010, 2012, and 2013. This is data from the most recent in 2013. And all the yellow dots are examples of countries that could receive an international remittance into a mobile phone. What you'll notice is that it's spread roughly equally across regions. But there are some other points to note. Even though mobile money had greater traction in sub-Saharan Africa, there weren't tremendously large number of deployments there, even in 2013. You'll notice that India had no deployments at all. And although there is now, there was recently a partnership established with M-Pesa for remittances into India. But some of the reasons for this are what we'll touch on through the rest of this presentation, which are the challenges to having remittances go into mobile phones. It is not enough to have a mobile money platform alone. There are additional challenges that need to be overcome. But I wanted to start on a more promising note, which is how quickly some of these mobile money deployments have been growing over time. And so across those 3 studies, we saw tremendous growth from initially a count of 8 into mobile to double that the next year, and then to double that again the following. What is not shown here is the number that we identified that were about to launch and then were not able to launch. And those that had launched and then stopped. And so that speaks to some of the challenges in having international remittances come into some kind of technology platform. And I would say that what those challenges fall into 3 categories. 1, the need to have a mature mobile money ecosystem. 2, the need to have a supportive regulatory environment. And 3, to have ideally an experienced partner with whom to establish that corridor. So you need somebody on the sending side, somebody on the receiving side, and if one of those is not a money transfer operator, you need somebody in the middle as well. And so that speaks to one of the areas in which we have seen the ability to actually have some of this tremendous growth is in looking at some of these experienced partners who can help accelerate the path of remittances through mobile. And we found 2 that were most compelling. One is a technology interoperability hub called HomeSend. They're part of a joint venture with Bix, which is part of Belgacom and MasterCard. And they make just the technology connection easier. The other is actually to partner with a traditional remittance provider, like Western Union and MoneyGram. Western Union currently has partnerships with 13 mobile operators in 12 countries, including both Smart and Globe here in the Philippines. And so clearly that brings a lot of advantages when it comes to brand recognition and remittance know-how, let's call it. but also some challenges, especially as we think about our goals of financial inclusion and reaching the unbanked and lowering price, because that type of partnership does come with some trade-offs. Some of the other innovations that we'll see, and I'll quickly run through these, and then I'll start touching on what this means for the customer, are some other models for how remittances can be sent. What's interesting about these 5 are that they touch on a key challenge in having customers want to use remittances through an innovative platform. And this is maybe something that I think there was less awareness of, let's say 5 years ago when some of these deployments were first starting out, which was an understanding of what it would take to have customers risk having their family's livelihood, essentially, which is what a remittance is, go into an untested or unknown platform they hadn't heard of. And so this issue of customer trust is key. And so many of these different models for sending a remittance into a different platform touch on ways to address some of those customer issues. The first is, let's call them an innovative online sender. It's not the catchiest name. But there, it's a platform on the sending side. So for somebody in, say, the US or the UK or Japan, a country that's sending the remittance, to have an online platform that provides a lot more information about the remittance than they might otherwise have seen. This includes especially fee transparency. So not to harp on Western Union too much, but previously if you tried to send through Western Union, it might charge you the same fee to send $50 or $200. I think this was an issue touched on earlier. It was just very expensive to send low amounts. Here, not only is that not true, but that breakout, so how much you have to spend to lower or increase the cost of that sending fee, is very clear. And it results in services like Remitly, which sends to the Philippines and India, having had tremendous growth. They've quadrupled their volume in 1 year. Another is addressing the issue of brand. So if I am the person who controls the remittance is the person in the sending country. No matter how much you love your Globe account or your M-Pesa account, if the person on the sending side doesn't believe you're going to get your money, they won't use it. They're going to send to Western Union. They're going to pick the brand they know, and they'll pay more money, and they'll make you have to hike to the nearest city to go get it because they know how important it is for you to have that money. And so ways that some providers are getting around that are to leverage a brand that is well known. So the end-to-end mobile deployments is the same brand on the sending and the receiving side, essentially a white label intermediary. And then there's also giving other forms of control to the sender, and that's the next 2. Rather than sending cash, sending a gift card, or directly paying for something like school fees or an electricity bill. And this is a bit of a different concept for remittance, but it speaks to giving greater comfort to the sender, in which case then they might send more money, or trust a service that otherwise they may not trust that would actually be more convenient for the recipient as well. And then finally, there's the very obvious sort of value add to customers, which is to lower the cost. A couple of years ago, there was a very innovative service that was partnered with Digicel and a service called ClickX between the Pacific Islands and Australia and New Zealand. It lowered the cost of sending a remittance by up to 75%. It was not. It was a very successful model, but built on a particular quirk in that corridor that would make it less scalable, but a fantastic example of innovation in the system. That is the same level of fee reduction that is possible in other markets. And so in MFS Africa, which is serving a number of African corridors today, is claiming to reduce fees from about 20%, very high in Africa, to 5%, which is, we know, is the goal. And so one quick scan of other trends to watch. There's additional cash substitute models that are appearing in other regions. But then the other two are particularly interesting. M&O partnerships for cross-border, immediate cross-border, meaning two countries that are literally next to each other. And so you see a lot of migration that way. And then remittances through social media. Both of those capitalize on the trust issue as well. Because you have, if you're in two bordering countries, you have knowledge of that mobile money platform already. And so you mitigate some of the concern that somebody from the US or the UK or Japan might have in sending to a country they're not as familiar with. And through social media, you're actually in contact with with your recipient. And you can tell them, hey, I'm sending you money. And they'll say, OK, I'm waiting. And then in theory, there's a lot of challenges to this. They'd receive the money and confirm all in one go. But the challenges to both of those in particular has definitely been on the regulatory front. And I know we've touched on this as well. So cross-border remittances are just now, I think literally within the last year, starting to develop in some corridors in sub-Saharan Africa. Remittances through social media, less so for regulatory reasons. But much promise that way. And so I'm going to close with two quick points. One of them is in, again, just recognizing the benefits that can result. The decreased prices, the expanded access, and the greater financial inclusion. So once you have the money in a mobile wallet, it can also contribute to insurance, lending, other services that we think of as traditionally banking frontier as well. But a caveat for all of these, and again, to temper the hope a little bit, it is not always the primary goal of partners who are looking in this area to target the unbanked. It is for some, but for others, understandably, the target is profit, and there you're going to go with banked customers first, and then over the longer term, hope to see the unbanked recognize those benefits as well. So that's part of what could be considered an action for those in this room is how can you accelerate that shift with those who are looking in this area. And then finally, just to recognize the trust issue one more time, customer trust is key. If the senders and receivers don't trust the new platform, they won't use it. And I cannot emphasize enough how disappointed some of those early adopters were for trying to, for investing heavily in remittance through mobile money platforms that got effectively zero traction. And so with that, the key takeaways for my end are that the landscape is evolving rapidly, that partnerships can be critical to scale because they can address some of those trust issues as well as regulatory and technical integration issues, and that it is not a quick win. There were many who thought when they were first starting that by having remittances come into a mobile wallet, they could greatly expand the use of mobile money in their countries, and so remittances could lead. That it was actually not the case. You need the mobile money ecosystem first. And so now, about 5 years after we started looking, some of these are finally gaining some traction. And with that, thank you very much.
Thank you, Andrea. That was both exciting and very, very interesting. Just a few key points that I kind of picked up. That the rapid growth of branchless banking in various modes over the last few years, but there are a few critical success factors around it, amongst them the ecosystem, the need for experienced partners of different kinds who form part of that ecosystem, and the regulatory framework around it. But she made a very important point, which is that while it's so exciting and the possibilities are immense, we still are faced with a dose of reality, which is that we still have a huge population that is unbanked, and we need to push them into the banked framework as soon as possible, and we need to do that really quickly. And the last point is that there is a need for patience as we roll out these kinds of solutions. So thank you very much, Andrea. And can I request you now to make your presentation?
Good afternoon to all. Very delighted to be here, and thanks to ADB for the invitation. Uh, Today, basically, I'm here just between you and the end of the day. So I'll be, very brief with my presentation, but in the second half of my presentation, I'll be showcasing one of the products that are very popular in Bangladesh. We're talking about challenges. Basically, developing countries face a lot of challenges. If you sum up all the challenges that a developing country face, the result will be the poverty. And poor people don't often stay in the static state of poverty. They move along the curve. And every year, thousands and millions of people around the world transition out of poverty by adopting new farming technologies. They invest in new business opportunities or even getting new jobs, for example. But on the other hand, a large sum of population, they fall back into poverty because of financial illness, health problems, financial setbacks, and other shocks. So, according to World Bank's Financial Inclusion Database, global database, approximately 2.5 billion adults, they don't have an account with a financial institution. Compounding this situation is the fact that the majority of those living in poverty lack even the basic most banking services that the bank can offer to them. And effective tools for saving, sending money, borrowing money, or mitigating financial risk can help people weather these financial setbacks they always suffer. And we need to basically find out an effective tools so that we can help these poor people. And if you look at this slide, you have a different kind of way to look at the world. These numbers actually represent the number of mobile phones that are there in these developing countries. And if you sum up all these numbers, you'll get more than 50% or approximately 60% of the total global mobile phones that are being used in developing countries. And approximately 85% of the total youths of the world basically are in developing countries. So we are a very young generation, and as you know that young people are basically tech savvy. They would like to use technology. So if you combine these two aspects, the youth population of developing country and the number of mobile phones that they are using, this combination actually could fight the poverty that we are having in developing countries. So this is the starting point of my presentation, that a single mobile phone device can actually fight poverty. So this is an interesting slide. This ugly-looking machine on top, this is the one that was used by NASA to send man to the moon. All right, so look at the specifications of this device. It's only 64 kilobyte of memory, which is nothing. We all are using more than that every day. Even in a small file, you'll have megabytes of memories. But this particular machine, which was basically used to send man to the moon, which is a very critical mission, only used 64 kilobytes of memory and with a processing power of very limited megahertz of processing speed. On the other hand, a basic $15 or $20 mobile phone has better memory and better processing power. So more than 50% of people, those who are living under the poverty and those who are holding this excellent, powerful, more powerful than the NASA device, I believe that we can fight poverty with this machine. If we can send man to the moon with a lower capacity machine, with the collective piece of the devices that we all have, we can absolutely fight poverty. I already mentioned that 2.5 billion of people are excluded from the financial sector, but we also have to see the 200 million of small businesses that are also lacking the access to basic financial services and credit. First of all, the objective of digital finance, if you see from the transaction point of view, the objective needs to be very cheaper. It has to be very speedier, and the financial transactions need to be conducted very, very small fraction of time. And from the customer point of view, the poor people, you have to increase the capacity to weather their financial setbacks, because there's no financial protection from which they are secured right at this moment. So you have to build up the capacity so that their financial setbacks can be weathered with this small device. And also from national point of view, so that they can also contribute to the economy of their country. From Bangladesh point of view, why mobile financial services is important? Because traditionally, Bangladesh has been an agro-based country with a cash-based economy. And whenever we talk about cash, cash is very, very expensive. I mean, storing cash, transporting cash, and ensuring those cash is very, very expensive. So using regular financial channels such as banks, insurance companies, these are not actually answer to serve these small transactions. So we needed to basically find out a solution with which we could cater to this untapped market. And with the growing urbanization, there was a lot of demand from domestic remittance. People used to come from their village home to the urban areas for better jobs, and they used to basically send money to their village home. So they need to have a proper system which is secured, which is very cheap, and which is very fast. So from that point of view, earlier we used to have these courier companies. They used to charge a lot of amount to transfer these monies from urban areas to rural areas. But later on we found out that these are not secured as well. I mean, often we used to find the money were lost. So from that point of view, we found out that there is a need for a very cheaper, speedier, and secure payment system. So that's why we come up with a mobile financial solutions in Bangladesh. And if you look at the chart, only the penetration of banking is very, very limited. Only 15% are bankable at this moment. The rest, 85%, is unbanked. And if you look at the mobile phone penetration, that's pretty large. I mean, more than 60% of our population are penetrated through mobile phones. So, there was a need for mobile financial services in Bangladesh, and we launched these services 3 years back. In the morning, we, our dean was, talking about that $12 charge for $10 remittance. You might say that commercial bankers are very greedy. Yes, we are to some extent, but it's not about greed purely. If you look at the internal cost structure of maintaining a current account, the annual maintenance cost varies from 20 to 30 US dollars. So that is back in 2010 data. So with the inflation and all, it will go up. This is for developing countries only. For developed countries, it's much, much higher. So, there is a cost to it. There are, internal costs that needs to be passed on to the customer, because banks are commercial organization. They're not, non-profit organizations. So they need to pass all the costs associated with cash handling to the customers. So if you look at the next slide, that $20 to $30 becomes $6 to $15 when we talk about the mobile money account. These are a typical cost structure for maintaining a mobile wallet. We call it mobile wallet. But if you look at the curve, the composition of the cost, majority of the cost basically is associated with the channel maintenance. For mobile financial services to be flourished in an economy, you need to basically establish a lot of infrastructure in terms of distributors, in terms of agents. So generally, if they are not interoperable agents, then typically your cost will be very high. And majority of the cost basically incurs because of setting up the network itself. So this is a typical picture of an agent in a very rural areas. At a village, you'll find the tin shed shop, grocery shop. They will be our typical agents in a village. So 3 years back, Bragg Bank and Money in Motion. Money in Motion is an entity which came up with the entrepreneur leadership, and Bragg Bank, with its main investor, Bragg being the largest NGO in the world, offered a distribution network across the country. So these two companies together formed a company called bKash. bKash is currently the largest mobile financial service in the world. We have surpassed M-Pesa a few months back. With 200 distributors, 113,000 digital money agents, and 15 million customers. Although you might say that the active portion is not so much, about 50%. Daily transaction would be 1.5 million with an average ticket size of $16 to 17. And bKash is now a new Bengali verb. It's like a Xerox. You do bKash. I mean, you transfer money from one place to another. So that way, it has become the common term, payment mechanism for Bangladeshi citizens. Some benefits, actually, of this mobile financial services. Basically, you have a formal sector database. You create a database when you include an unbanked population into a mobile financial network. You create a database. Every day we are creating about 30,000, 40,000 database every day. So these small piece of database can be useful while considering their savings, considering their finance needs, considering their insurance needs. So whenever at a later stage, we'll be planning to go for insurance products like insurance or credit or a savings scheme. These particular formal database will help us a lot. And also from risks point of view and savings point of view. Initially, before introducing bKash, people used to basically save money, those who are not accessible to a formal banking channel. They used to save in mini cooperatives, or they used to save under their mattresses, when we heard it earlier as well. So bKash actually gave us a platform. bKash has become the national mattress for the unbanked population. So they are saving in bKash wallets, and later on we'll be also implementing, or we'll be also offering products like insurance, savings products, micro savings products, and finance as well, credit products as well. Yeah, in terms of international remittance, actually the flow, cash flow would be something like this. Our non-resident Bangladeshis would go to an exchange house abroad. They'll be depositing money, and Infosys Finacle is the core banking software for Bragg Bank. So there will be an arrangement with the exchange houses with Bragg Bank, and the money will directly come into the bank's core banking software. And after that, the orange arrow denotes that this is a manual process right at this moment. So the bKash is using a Fundamo system, which is a Visa system. So there is no integration at this moment with the bank's core banking software with the bKash's Fundamo software. So currently what we're doing is we are manually posting each and every remittance and then passing onto our bKash wallets. So all this process is completely manual as of now. And the bKash is basically then sending it to the recipient's wallet. we have a project this year. We'll be completing a project to integrate these two systems. So the orange arrow will become blue by the end of this year, whereas the bank's core banking system will be integrated with bKash's Fundamo system. So the mobile financial system and the bank's core banking system will be fully integrated. So that way, we'll be able to basically offer a lot of other products which we are currently not being able to provide. Because at that time, what will happen is people will not take out the entire amount of money from their bKash wallet. They'll be able to save in the regular banking channel with interest. Since I already said that the calculation is now totally manual at this moment, so if you look at the entire chart, the right-hand side, there is an insignificant amount of money which is coming through mobile phones, only 1%. But look at the potential. When we can integrate these two systems, then we'll be able to tap into a lot of customers with international remittance as well. All right, some of the challenges, mobile financial services, there are a lot of challenges, there are a lot of market barriers, but government regulations, I won't say that these are barriers. This could be market enablers as well too. In Bangladesh, for example, our regulators actually come up with a very nice model for mobile financial solutions. Because earlier we used to have confusions whether the telco companies would lead this or the bank would lead this, and our regulators has basically had issued instructions that the banking company, banks will be able to basically lead these mobile financial services, and the telco companies will be the service network providers. So they have clearly defined roles of each partners for the entire ecosystem. So that way, actually, a bank, basically a country's regulators can enable this particular mobile financial services. Anti-money laundering and financial terrorism, we live in a world where we always find terrorism, and terrorists are being financed through banking channels and non-banking channels as well. So this could well be one of the platforms for terrorist financing too. So regulators basically has a role here to play. They have to basically find out a mechanism so that we can fight terrorism financing, as well as so that money launderers cannot get away with their money. And user experience is a challenge we faced while implementing bKash or mobile financial services. Initially, people tend to basically reject the new concept, the new technological concept, because lack of trust issue. For example, we used to have customers in the rural areas who would come to the branch and withdraw the entire money and immediately deposit the entire money, so that he's sure that his money is kept safe in the bank. So that kind of lack of trust is there in the rural areas. So we had to deal with those kind of user group. So also the awareness program, how this technology-based mobile financial service system will work, that will also need a little bit of explanation to the mass community. So earlier we also used to do some village-based local kind of drama. All right, in Bangladesh it's very popular. There are drama companies who would go out in the village area and display their performances. And on those performances during the break, we used to basically capture our products. We used to demonstrate our products through drama itself. So there has been a lot of awareness program went on before introducing this mobile financial services. Thank you very much.